Thanks for joining us today on The Close. I'm Morella Fernandez. Markets close in 30 minutes. Let's get to the stories we're following out of the BNN Bloomberg newsroom. SpaceX stock having a stellar launch on the first day of trading. The rocket maker opened the day at $150 per share. That's U.S., 11% above the offering price. The company is now valued at roughly $2 trillion U.S. It's trading on the NASDAQ under the symbol SPCX, and it is the largest IPO in history. It makes Elon Musk the world's first trillionaire. We are keeping an eye on oil prices today with new momentum towards a deal between the U.S. and Iran. Pakistani Prime Minister Shehbaz Sharif says there's a final agreed-upon text. Iranian state media says terms of the deal, which may be signed as soon as the weekend, include the reopening of the Strait of Hormuz, Iran relinquishing its stockpiles of highly enriched uranium, and the U.S. lifting its blockade of Iranian ports. It all comes ahead of next week's G7 summit happening in France. Shares of Roots seeing a decline after the Canadian retailer reported a loss in its most recent quarter. Roots says it lost more than $10 million because of higher costs associated with a new distribution partnership and its ongoing strategic review. It's also taken on nearly $2 million in added costs as part of its planned transition to Metro supply chain. Now, on the upside, the company saw sales rise from the year before. SpaceX is hogging the limelight today, stealing from other rocket and satellite stocks. MDA Space among the laggards on the TSX, down 8% last we looked. Let's go to Chris White. He's head of research at 5i Research. He joins us now to talk some more about what's been going on. Thanks for joining us today.
Thanks for having me.
So MDA Space secured a new contract with the U.S. Air Force, but we've seen a move down. Is this a side effect of SpaceX?
Yeah, I think so. So I think what we've seen over the last several months is that investors were really hoping to get some sort of a proxy to SpaceX by owning many of these space exploration related stocks. And so essentially a lot of the space plays were acting as proxies up until IPO day today for SpaceX. And so once we saw SpaceX IPO today, I think a lot of investors really sold their proxy plays to buy into the real deal, essentially. And so I think for MDA Space specifically, it's less so fundamentally driven or news specific, but more so just purely sentiment around the SpaceX IPO.
Okay. Are there any concerns about MDA's fundamentals?
So MDA is a high quality company and it manufactures satellites. It has a lot of business, particularly for Telesat, which is also developing low Earth orbit satellites, similar to SpaceX and Starlink, but it's going to be for a completely different vertical. So they're looking at developing satellites for commercial, enterprise, government agencies, whereas Starlink is a little bit more consumer internet focused. So MDA, its fundamentals are intact. It's had a nice run. So I don't think that today's move is at all related to fundamentals.
Okay, let's talk about some other stocks that are strong today. Gold and silver, for example, moving up. Montage Gold is in the green today, but double digits. What's going on there?
Yeah. So we've seen a big move up in a lot of these gold and silver miners today. And really what we've seen is the price of gold and silver has kind of been gradually slumping down over the last few months. And really gold and silver were acting as this large risk off sort of play into the beginning of the year. We knew that there was going to be a lot of geopolitical events and some risks. And so investors were really looking to buy into those risk-off plays. And that was kind of the gold and silver plays and the miners. And so what we're seeing is a little bit of a bid in gold and silver today. It's not huge. It's not a material move up. But I think what we're seeing is as the price of gold and silver stays at least flat, as long as it doesn't go down materially, a lot of these miners have huge operating leverage. And so when the price of gold essentially doubled in about 1 to 2 years from 2,000 to over 4,000, the all-in sustaining cost, the cost to mine gold, really didn't move up that much. So their operating leverage expanded massively. And so I think that's what's happening with the gold and silver miners today.
Okay, because Silvercorp is boosting its reserves. So is that a meaningful increase for them there?
That is, yeah. So for Silvercorp, the extension and the addition of its reserves is pretty meaningful. And essentially, whenever we see the reserves increase, I think it was 50% for Silvercorp, that's a meaningful expansion to the mine life. And that's exactly what investors want to see. So as soon as there's an increase in reserves, it's essentially the miners, they're drilling more, and then they're assessing and seeing that there's more viable silver to be mined from that mine. And when we see that happen and the mine's already developed and the construction costs are already kind of sunk costs at that point, the additional revenue, as long as it's economically viable, is still quite positive. And so Silvercorp is benefiting from that leverage still, and also from a little bit of a bid in the price of silver today.
Let's switch gears, get to retail for a moment. We've had Roots reporting earnings. They're down a $10.1 million loss for the first quarter. How much of the loss do you think is about the big picture for Roots?
Yeah, so for Roots, they've had a bit of a repositioning here. So the CEO has done, I would say, a good job of restructuring the company and really positioning it from this markdown heavy retailer into a premium brand sort of name. And it's had a bit of a rough stretch. So it did IPO at about $10 in 2018, and it's trading at about close to $5 today, but it was as low as almost $1 in 2020. And so the fundamentals are actually expanding slightly for Roots. So we're seeing over the past several quarters an expansion in free cash flow. It's paying down debt. Sales are re-accelerating. In the most recent quarter, we actually saw sales grow, but its loss did widen. And part of that was due to the new distribution partner. But overall, the momentum's actually pretty decent for Roots here. It's hitting close to new 52-week highs. And even though the loss did widen, it's only down about 2 to 3% today. So I think that Roots still looks okay here, all things considered.
Okay, I do quickly want to get to one of the stocks that I know you watch, and that would be Nutrien. I imagine that the conflict in the Middle East makes this stock fairly volatile of late. What have you been looking at more lately with Nutrien?
Yeah, Nutrien's interesting because the recent momentum has been getting better. The momentum's moving up and to the right, and it's priced decently at about 11 times forward earnings, and it pays a bit of a yield. But what's interesting about Nutrien is that they mine potash, which is actually not affected by the Strait of Hormuz and the closure there, but then they manufacture nitrogen. And nitrogen is impacted by the Strait of Hormuz closure. But what we're seeing is there's going to be some sort of opposing headwinds and tailwinds as a result of any potential reopening of the Strait of Hormuz. So because nitrogen, the manufacturing process for it, requires a lot of natural gas, if we see the Strait of Hormuz reopen, I think the natural gas prices could come down, and then that would be a tailwind for Nutrien manufacturing nitrogen because that's a major input cost. But there could be some slight headwinds due to the softening of nitrogen due to the reopening and the increased supply and flow there. But overall, I think this is a commodity cycle sort of play. Momentum looks good. It's priced well, and fertilizer is always in demand.
Chris White, got to leave it there, sir, but appreciate you joining us. Chris is head of research at 5i Research. Up next, we're watching shares in SpaceX after that big IPO today, the largest IPO in market history. We're back in a moment. Prime Minister is in France. He's kicking off a 6-day tour in Europe ahead of the G7 summit next week in France. CTV's senior political correspondent Mike Lecouture has more.
French Alps next week. Prime Minister Mark Carney is in Paris today for meetings with French President Emmanuel Macron. Canadian government officials described the meeting as a passing of the baton, as Canada was the host of the G7 last year in Kananaskis, Alberta. The two leaders also want to speak about AI as well as online harms. In a background briefing to reporters, government officials said that France and Canada are aligned on the role of government regulation in preventing online harms. However, they also cautioned that they could be difficult to try and get consensus around the G7 table because not all leaders are on the same page when it comes to that. U.S. President Donald Trump is expected to be at the G7, and as the CUSMA renewal deadline is just 3 weeks away, Canadian businesses are keen to hear if there's any progress that's going to be made on that front and if the two leaders will get any face time. Now, as for the G7 itself, Canada is hoping that the group of nations will make progress in 3 areas. The first is strengthening critical minerals value chains among like-minded nations. It's something that was started at last year's meeting. Canada also wants to reduce macroeconomic imbalances across the world, and Canada also wants to talk about the future of international trade as some nations continue to pull back in that space. Canadian officials who briefed reporters ahead of the trip also warned about getting consensus on any of these topics, saying that it's unlikely that we'll see a joint communique at the conclusion of the meeting. Now, between Paris and the G7, Prime Minister Mark Carney will also be going to Ireland. While he does want to deepen economic ties with that country, we're also expecting a bit of a personal side trip, as his grandparents' ancestral home is in Western Ireland. Mike Lecouture, CTV News, Paris.
Time for a quick break. Back in a moment. A high-profile Canada-U.S. business summit in Toronto this week focused in on CUSMA. The U.S. president says he's not interested in negotiating a new trade deal, but his ambassador is hinting at ways Canada can make it work. CTV's Abigail Beeman reports.
A tremendous amount of things where we have a need.
At a Canada-U.S. summit, the American ambassador gives context to these comments from Trump on the Free Trade Pact up for review.
I'm not looking to renew it. We don't need anything that Canada has.
Pete Hoekstra says potash and oil are among the things the U.S. needs.
Go into these negotiations very aggressively.
And it's Canada's job to sell itself as the best place to buy.
I think every time we've met with the Canadian government, the president has always kind of closed the meetings off or consistently said through the meetings, make us an offer.
Hoekstra also referenced a positive shift in rhetoric from Doug Ford on his trip to D.C. this week, Pierre Poilievre, and this from the Prime Minister.
Canada Strong will help make America great again.
What I'm encouraged by is, what we do see as a pivot.
As an investor, as someone who's spent most of his career allocating capital, uncertainty sucks.
Canada's rarely heard from ambassador said America first doesn't mean America alone.
I think we need to continually remind Americans of the importance of Canada to the United States. We're not good at that always.
I'm optimistic.
While the minister responsible remains hopeful about a 16-year deal extension.
I try and demystify this July 1st deadline.
Right.
It's not a cliff that everybody goes hurtling off.
LeBlanc said he spoke with U.S. Commerce Secretary Howard Lutnick this week and will see Trade Representative Jamieson Greer next week at the G7. LeBlanc described the conversations as constructive with a need to keep moving.
For a look at what comes next in trade talks between Canada and the U.S., we spoke with Joy Knott, partner at KPMG.
I don't know about the word aggressive, but I think Canada definitely has something to offer the trade agreement overall. If the free trade agreement was not important, we wouldn't have been getting the exemptions that we've been getting for tariffs this whole time over the past 15 months. So should we go in aggressively? I don't know about that word, but I mean, we have value to offer, and we should put that value on the table. And realistically speaking, the U.S. needs this trade agreement, as does Mexico, just as much as Canada does.
All right. So what kind of case should Canada make? What is the biggest chip we have on the table?
There's a number of chips on the table, obviously. I mean, there's different industry sectors, there's agricultural, but I'm just going to focus on automotive for a second, because in our last round of negotiations with a free trade agreement with the United States, which resulted in CUSMA, automotive was at the center of the table at that time. And it's still going to be an important player this time for obvious reasons. There's been rumors, nothing official has come out yet. There's been some media reporting saying that the new rules for automotive might require that the content of a car move from 75% to 82% North American. But the kicker there is that 50% of the overall value of the car would have to be USA, not Canada or Mexico. Now, that would be a big change, but, to quote Flavio Volpe from the Canadian Automotive Manufacturers Association, it's a path. And up to now, we've been hearing we don't need anything from Canada, right? So now there's a path. It's this new number, which is a very high number, but at least it's something.
I also want to get your thoughts on the delay of the opening of the Gordie Howe Bridge. Do you think that is now on the table as part of a bargaining process here?
Absolutely. I think everything's on the table when it comes to bargaining chips on the table. The U.S. this administration has a particular style of negotiating. Let's say it that way. And I think they like to ensure that they always have the upper hand at every time that we sit down at the table with them. So things like the Gordie Howe Bridge, things like the rules of origin, things like even starting the formal conversations with Canada are all negotiating chips. So the Gordie Howe Bridge is just, I think, caught up in all of that.
Joy, does the American president have the authority to scrap the deal? We know he speaks as if he has that authority, but does he, or does he have to go to Congress for this?
That's a great question. And I'm not a lawyer, but legal scholars and everything that I'm reading in the United States says it's really not clear cut. There's something really quickly called trade promotion authority. And that's when Congress basically says to the executive office, to the president, go ahead, go out to the world, negotiate free trade agreements on our behalf. And then when you bring them home, Congress still needs to approve them, with the caveat being we can't make any changes. You present it as is, and we have to either vote yes or no with no changes. So if to negotiate a free trade agreement requires congressional approval, ultimately, does getting out of one require congressional approval? Some people say, well, he pulled out a TPP, so why can't he pull out a CUSMA? The difference there being TPP at the time was a negotiation. There was no law on the books for that. USMCA, as they call it in the States, CUSMA, as we call it here in Canada, is law. So who knows? If the president does take unilateral action and withdraw the United States from the deal, I think it's pretty safe to say you will see litigation happening in the U.S.
Could this whole process drag on for years? I'm wondering if you see it as being a more constant threat over the relationship.
Could this drag on for years? Yes, I think it could drag on for years. I know that Dominic LeBlanc's letter to the U.S. administration and Canada's position is that we would like to renew the agreement for 16 years. That's our position. And of course, that would be the ultimate thing for us. That would be a big win for Canada. What's more likely going to happen is that we're going to go into this period of a type of zombie type agreement where technically it's alive, but we have to meet and negotiate at the table once a year, every year. And of course, that's just repeated uncertainty for Canadian, US, and Mexican companies that are trying to plan their business. And if once a year, all the rules are up for renegotiation, high level of uncertainty.
Joy Knott there, partner at KPMG. All right, let's take a look at how we are ending the week. for the North American market, but what is moving on the TSX. Bloomberg equities reporter Stephanie Hughes is joining us now. Stephanie, we saw a couple of big moves today. One of the biggest was Montage Gold up double digits last time I checked. Is there anything specific for that company that's moving it up?
Hey, Marella, happy Friday. So it's actually more a sector-driven move for Montage Gold, the shares of which gained by over 12% at their highest point today, which was its strongest advance forward since January. So it's leading the gains among Canadian gold companies on reports that the U.S. and Iran are on the cusp of acquiring a peace deal to reopen the Strait of Hormuz, which may even be reached as soon as next week, according to a few senior officials with knowledge on the matter that couldn't be named. And that timeline would coincide with the G7 summit in the French Alps next week. So these renewed hopes for the end of the Middle East conflict and the reopening of the Strait of Hormuz somewhat stabilized gold prices earlier in the session, but more so it was the sentiment that drove these gold names higher. That's because reopening the strait would ideally get more energy supply online, and ease some of these inflation concerns and prompt central banks to take a more dovish stance. And gold is really an asset that does well in a low interest rate environment as an asset that is a non-yielding one. So that's what a lot of traders are really looking for here. So it wasn't just Montage Gold in the green, though it was the biggest mover in its sector and the top performer on the TSX for a pretty good chunk of the trading day today. But we're also seeing names like Taseko Mines, Aya Gold and Silver, NGX Minerals, and many others. It was one of those days where all the top 10 performers on the TSX were pretty much gold names, and that dynamic sustained for most of the session today, Marella.
All right, let's get to TMX Group, which also on the move today, not by quite as much, but still moving up.
Yeah, it was a modest gain by over 2% at its highest point today, but that was after a pretty well-received acquisition. So I thought it would made for an interesting mover story. So the Toronto Exchange operators in the green after acquiring RAFI indices for about $490 million in total. So that's beneficial to TMX here because the transaction will more than triple its VettaFi assets. So analysts from TD Cowen, RBC Capital said that this is a really good idea for a deal here. And even before we saw the market open today, they were expecting to see a lift in share moves. And that's exactly what we saw, Marella.
All right. We've got Stephanie Hughes, the latest on what's going on in Toronto. Thanks for the update. Have a good weekend. We'll have a quick look at the markets as we head to a break and the end of the trading day, as well as the end of the trading week. Markets are in the green with the TSX Composite up 0.75%, the S&P up 0.5%, and the Nasdaq up 0.3%. We're back in a moment with the end of day numbers. Here are the closing bells for the end of the trading day, the end of the trading week. At the Nasdaq, it is SpaceX ringing the closing bell after that giant IPO earlier in the day. New York has Voyager Technologies ringing the bell. You're watching the close on BNN Bloomberg. I'm Marella Fernandez. Here's how we ended the day on Bay Street and Wall Street. The TSX ended the day up 0.8%. That's a 266 point move. It is at 34,937, so still under 35,000, but up today about 0.75%. Let's go to the southern border, and there we have the S&P 500 up 0.5% or 37 points. Dow Jones up 0.7 or 353 points, and then the Nasdaq today up 0.3. About a 79-point gain, just above that. Having a look at the movers now in Toronto, Stephanie told us about Montage Gold. It is a gainer of 11.8% today, or $1.68, taking the stock price to $50.92. A lot of the materials are gaining today with news of the conflict in the Middle East, hopefully coming to some sort of new memorandum of understanding on the weekend. Taseko Mines also a winner today, almost 10%, just short of that, or up 95 cents to $10.47. And then Skeena Resources also gaining almost 8% up today, or $2.88. It's up 106% over the last year. On the flip side, and in the red, we have MDA Space. It is down despite a new contract that it signed in the U.S. So it's down 8.6% or 489. That has to do with SpaceX sort of crowding that space and zapping all the energy from the competitor stocks. Curaleaf is also down today. It's bounced around a lot lately. It's a cannabis stock. It's down almost 5% or 72 cents. And then Constellation Software, familiar name, the business has been eaten away, or concerns about the business hanging over the stock because of concerns of AI. So it's down $134 today, or 4.4%. All right, let's go to movers now south of the border. Bloomberg's Avalon Purnell joins us to talk about that. Avalon, we're talking about MDA Space in Canada, EchoStar you have down there. SpaceX just sort of sucking the energy from all of its competitors today. Is that what happened here?
Yes, you're absolutely right. That's actually what we heard from investors here on our side of the border as well. EchoStar slid about 11% to end its biggest one-day drop since January, and that is after SpaceX's record $75 billion IPO. TD Cowen analysts having a great note out saying that some of the sell-off is driven by profit-taking from this IPO. A lot of people were entering into EchoStar in the past couple of months because they have a 2% stake in SpaceX, and this was kind of a way for investors to indirectly invest into SpaceX. But now that SpaceX is now public, there really is no reason to be indirect. Now you can just directly own that stock, and we are definitely seeing a lot of people reacting in that similar fashion. Worth noting, though, that EchoStar's shares still remain up more than 530% in the last year.
Okay, let's get to Lennar, which is down after posting an earnings report. What did the home builder have to say?
Yes, Lennar did not have the greatest day today, falling nearly 5% into the close. And that's after the home builder's delivery forecast for the third quarter fell short of expectations. The management did have very similar commentary as past quarters, saying that both the war and also high interest rates are really spurring customers to hold back on these home purchases. And Truist writing that while the results were disappointing, they were kind of happy to see the fact that there wasn't margin breakdown alongside those numbers. Also worth noting that their peer KB Home will be reporting later this month. They also were mentioning in past quarters as well about how the Iran conflict in particular was causing people to not necessarily want to buy homes. We'll be very curious to see what happens with their earnings results in the next 2 weeks as well.
All right, Avalon and Purnell with the latest in the U.S. Thank you for that. And coming up next, SpaceX, the story of the day. Will wrap day one of trading when we come back. SpaceX started trading today at $150 US under the ticker SPCX after the biggest initial public offering ever. The stock has been soaring. Some are already asking, though, whether it's running too far ahead of fundamentals, too early. Let's have a discussion with Jay Bala. He's CEO and Senior Portfolio Manager, AIP Asset Management, and Gregory Allen. He's founder and CEO of Decision Tree Research. Gentlemen, welcome to the discussion. Let's all take a breath. Trading day is over. First day of this stock trading, and there was a lot of excitement around it. So at the end of the day, at 159, up 19%, pared back a little bit from where it was earlier in the day. Jay, I'm going to start with you. What does the interest in the stock say to you?
Yeah, no, look, I mean, I think it tells us that, look, we're off to a roaring start. I think we're back to a risk-on environment. I think this is going to be incredibly positive for the IPO environment on a go-forward basis. And so, look, I mean, I think however you look at SpaceX, it's definitely a huge success story, and it's been a huge success story from an IPO perspective. And so, look, I mean, I think you're going to see the next big sort of unicorns coming out. I think, OpenAI and Anthropic will probably be the next big ones, and then you're going to have Stripe and Databricks and a whole flurry of IPOs coming. But, definitely I would consider this incredibly good news for the markets, and, I think this is a good sign that the bull market keeps roaring on.
Okay, Gregory, do you invest in IPOs generally? If not, why not?
Oh, not generally. I tend to be a relatively conservative investor. And I think in IPOs like this one, there's a lot of reasons to be skeptical that this price is deserving on the fundamentals. I mean, right now, with that price bump that we've seen since the opening, SpaceX is now valued at more than $2 trillion. trillion. And, I have an MBA, and I think sometimes it's helpful just to bring these things back to Business 101. What would it take for an annuity to be valued at more than $2 trillion? It would have to kick out a guaranteed payment of nearly $100 billion every year forever. SpaceX is not kicking out $100 billion of profit every year, and it's not guaranteed to do so forever. In fact, it actually lost $5 billion last year. So I do want to say that SpaceX is an incredible business. It has already transformed one industry, space launch. It appears extremely likely to transform another industry, telecommunications. But this bet is fundamentally about AI. And so much of that is speculative. SpaceX's biggest AI revenue right now is leasing its infrastructure to a competitor, Anthropic, which has a far superior AI model. And so that leaves a lot of open questions about whether this dream is going to be realized to justify this valuation.
Okay, Jay, as you know, Starlink, which is the satellite part of the company, does make money. It's in profit. The rest of it, of course, is not. They funnel a lot of their money into research and development. Do you think the forward story, as Gregory said, is going to be about AI? Will that be the big money maker in the future?
Yeah. I mean, I think the way we look at it is you got to bifurcate these IPOs into two segments, right? Segment number one is for the next 6 to 12 months, it's more mechanical movements. It's all about what indexes are going to add you on and what kind of forced buying or passive pressure are you going to cause on that, right? The second part, and I completely agree with Gregory on the longer term. On the longer term aspect, of course, is about valuations, out 12 months, 24 months, 36 months, the next 10 years. Of course, valuations will fundamentally matter. But I think for the next 6 to 12 months, I don't even think the valuations matter at all, right? Like right now, it's just a supply-demand imbalance. There's only a certain amount of float out there. And within the next 15 days, what you're going to see is the NASDAQ is going to add SpaceX to the index. The NASDAQ has $5 trillion in ETF money that tracks it. And so if SpaceX gets a 1% allocation to the NASDAQ 100, that triggers $50 billion in buying power.
Yeah. Gregory, what trends are you going to watch in the first few months of trading?
So I think there's one question here, which is how much is this stock actually impacted by developments of SpaceX itself? As you just heard, there are a lot of mechanistic movements of capital that are affecting this. But the company didn't float that much of its overall stock, so it's comparatively easy to be oversubscribed when you're not actually allowing that many shares to be sold. I think the question here is this actually going to be a stock that's going to respond to news? If, for example, there is a major delay with the latest generation of Starship, which could affect the rollout of additional Starlink satellites and the next generation of the constellation. If, for example, there are issues with building the next generation of the Colossus infrastructure, and if the Grok 5 model does not put Grok back into peer competition with companies like Anthropic, those are big open questions. But I think the biggest open question looming over all of this is if SpaceX is going to say that it's going to have an enduring advantage in building and deploying AI infrastructure, and specifically orbital infrastructure, they need to not just hit their prototyping milestones of putting GPUs on satellites in space, they need to provide a clear path to 10,000xing what they're currently doing. I mean, just to fulfill their Starlink obligations, they need their launches to go up massively of this next generation rocket. And the orbital infrastructure plans that really drive the terminal value of this stock are far more ambitious. We're talking about 100x the number of launches they do per year with a rocket that's not even finished being developed yet.
Okay, so let's turn that back to Jay. Two very good points. One is, how's the CEO going to do with public scrutiny of this company? Is he going to bristle? Is he going to sort of be a weight on the stock, or is he going to be a boost to the stock? Second, when can investors expect the fundamentals for the company to change in a way that will be positive on the bottom line for them?
Yeah, no, those are both good questions. I mean, look, at the end of the day, Elon is always going to be Elon. At the end of the day, look, I think the market's proven it. He definitely carries a premium. Whether you like him or hate him, the stock performs well because of him, right? At the end of the day, if you had somebody else leading the charge, I don't think you would have a $2 trillion valuation. I think that's just a fact, right? And in terms of valuation, like I said, I don't think anybody's even staring at the valuations for the next 12 months. Like, I don't even think it fundamentally matters. I think all that really matters is like this is a trading stock, right? At the end of the day, I mean, there's going to be a bit of volatility on it, but it's the mechanics, right? Fundamentally, how many indexes do they get added to? How much buying power is there? How much forced buying passive money is going to just push that stock up because there's no choice in that, right?
Okay. So, Gregory, you used to work at Blue Origin, which is Jeff Bezos' space company. You're saying this is going to be an AI story in the end. Jay's saying no one's really going to care about sort of valuations and earnings for a little while. So let's go sort of a year or two down the road. What do you want to see in earnings, let's say 2 years from now, Gregory?
Well, he's absolutely right that simply having Elon Musk as your CEO puts you in a different comparables category for your terminal valuation multiple. But fundamentally, this is tied to the AI boom. Starlink is a very profitable and rapidly growing business, but it is nowhere close to justifying a $2 trillion valuation for this company. That really is riding the AI boom. So if you don't see continued explosive growth in AI demand, that could have a near-term effect even beyond some of the mechanistic inputs that we talked about before. Let's talk about Anthropic, for example, which just became the largest AI infrastructure rental customer of SpaceX, signing an agreement for its Colossus supercomputer infrastructure at $1.25 billion per month, leasing that infrastructure. That deal goes through 2029. And why did Anthropic feel like they needed to make that deal, renting infrastructure from a competitor? It's because their revenue growth has been so explosive. Their run rate, which means if you take the December amount of revenue and multiply it by 12 to get a 12-month multiple, in December 2025, Anthropic was making less than $10 billion a year of run rate equivalent. And now they are close to $47 billion, according to the latest reporting from May. That is 5xing their revenue in only 5 months. That is the explosive growth of AI that makes these valuations even remotely credible. So if the AI boom does not continue at its current explosive growth and its explosive pace, then there is no credible story that would justify SpaceX's valuation. And I think that would be enough to move the needle even beyond the mechanistic things. But here's the thing. I expect the AI boom to continue booming.
Okay, more to come. We will see, as you mentioned, Anthropic and OpenAI expected later this year. Jay Bala, thanks for joining us. Gregory Allen, thank you as well. I appreciate you sticking around.
Thank you so much.
Up next, shares of Adobe taking a hit today. More on that in just a moment. Adobe shares under pressure, The company reported second quarter earnings yesterday after the end of the trading day with strong demand for its AI products. But what everyone is talking about is the sudden departure of the CFO. Let's break it down with David Featherstone-Ha. He's EVP Investment Strategy at Vista Shares. Thanks for joining us today.
Of course. Thanks for having me.
So clearly this departure wasn't expecting. How are you reading this?
Yeah, I think part of it is you have to kind of separate it into two things. One, if you were to actually look at the CFO's trajectory and history, a lot of his experience going back for a decade plus has actually been in the semiconductor industry. So his fit to Adobe would actually be a little bit questionable than his move back to Marvell. And then the second piece is you have to look at kind of two industries moving in different directions. For Adobe, I think it's 13 quarters in a row where they've kind of beat the top line. They've provided, great guidance on all metrics, essentially. But they're giving investors every quarter exactly what they want, but they're not giving investors the AI answer. And when you think about where the market is moving from the AI perspective, a lot of that is going to the semiconductor plays and a lot of the picks and shovels. And that's where you've kind of seen the CFO move out and kind of lean a little bit more on his experience and go back to Marvell.
So, David, how challenging will it be for Adobe then to find not only a new CFO, but they also need a new CEO?
100%. And that's a lot of the question. When you think about who can actually benefit from this shift from all the attention that's going into the AI infrastructure, a lot of it is actually on the workflows. Adobe has probably the corner of the entire design and illustration market. When you think about all of the ecosystem of designers and creatives that use their tools, they probably have the richest data set that you could build agentic workflows off of. So it's an extremely critical inflection point for the company's history. All the fundamentals point to very strong outlooks. It's the uncertainty around how they can actually take advantage of the moment and go from executing on the financial metrics to actually executing on the business metrics, specifically around how they're going to capture a lot of this AI momentum.
You mentioned that they haven't really given an answer to the question. Have they spoke about it at all in ways that they're trying to introduce it or trying to make it an offering to the people who use Adobe?
Yeah, I think there's ways that they're trying to incorporate it within a lot of their tools, but I think at least from when you're talking to users, it's been relatively surface level in how they're taking advantage of that. I mean, for the most part, if you were to talk to Adobe users, some of them have relative frustrations with the tool, despite how locked into the ecosystem there are, which I think points to kind of why investors are being a little bit frustrated. Despite the financial results, they have such a unique position. They really haven't been able to capture a lot of their ability to unlock features. When you start looking at some of the freemium models or some of the more AI-led models, you can look at Midjourney, you can look at what Canva has been doing. Claude Design from Anthropic released a really great new design tool that people have been using. The market has kind of been frustrated with the rate of change that's going on around them, despite them having this very unique advantage.
All right, we do have to talk about SpaceX. It's a story of the day. Were you interested in picking some up at all today?
Well, I tend to kind of view a lot of these frontier technologies as people kind of overestimate them in the short term and underestimate them in the long term. I think that's kind of true for this. Even though SpaceX has been around for multi-decades, it's still really pushing the frontiers of a lot of different technologies. So when I kind of think about it, if we were having this conversation again in a year, I wouldn't be shocked if it's trading, below the valuation it is today. But then if we're having this conversation again in 6 to 8 years, I would expect it to be significantly higher. So I think the framing of the perspective is very important to whether someone is interested in picking up some SpaceX shares or not. From a valuation perspective, it's very hard to get comfortable with a 90x on revenue. So you can definitely see a lot of the intense scrutiny that this company has been taking. But what you're really buying is a narrative. And I think it's a great juxtaposition to what we just spoke about with Adobe. Adobe has quarter after quarter amazing earnings, but they don't have the narrative. They don't have the future. Well, the narrative for SpaceX is really intergalactic and very easy for people to get behind that sort of a narrative and terminal value. They can really start getting excited about that. So for the way we're thinking about it is, long term, definitely still very bullish on the company long term. But when we're thinking about it from a short term perspective, probably some better entry points over the next 12 months.
Do you think that investors, as you mentioned, buying into the story, were really about AI or really about space or really about both?
Well, I think that kind of points to part of the dilemma that people have had with really valuing the company to begin with, as it plays in so many different verticals. I think what you're seeing is an aggregation play into different industries that's really started to benefit and create a platform. When you initially were looking at SpaceX in the early days, people would question the size of the market for launch. What they've proven is they can take that market, expand it, one, and then two, leverage it to actually build other, enterprise and consumer use cases with Starlink. So they've kind of taken one market, expanded into another. And people are kind of viewing that same thing play out. They think Starlink has a ton of room to grow. And then if you're looking at XAI and they're, going from connectivity to launch to compute, this is really a platform play that, is all three of them are in very early innings. And when you look at the first two businesses, launch and connectivity, they've created very strong monopolistic characteristics in that industry. So people are also extrapolating that to the compute ability of the company as well.
David, I'm out of time, but appreciate your time. Thanks for joining us. David's EVP Investment Strategy at Vista Shares. Coming up next, G7 leaders meet in the French Alps next week. We'll take a look at what's on the agenda when we come back. G7 leaders will meet in France next week for their annual summit. The war with Iran and rising tensions with China are expected to dominate the agenda. Let's go to Heidi Krebo-Redeker. She's senior fellow at the Council on Foreign Relations. She joins us now. Thanks for your time.
Thanks for inviting me.
So two very different conversations could be had. One predicated on an agreement with Iran, another on no agreement. Do you think Trump is pushing hard to try and get an agreement so he has something to put on the table at the G7?
So there are a lot of rumors that there might be some announcement about an agreement with Iran, but we've heard obviously for quite a long time about the potential on-off of reaching an agreement. I think, you've got a number of different agendas that have been long in the works for this G7, and then you have the reality of the geopolitical backdrop, both not just Iran, but also Ukraine. And then, the spillovers that we've seen in the economy, sort of the commodity shocks, the energy shocks, supply chains, and obviously transportation and fertilizer costs going, up into the stratosphere. So I think you're going to have a lot on the table.
Okay. Are you surprised Trump is even attending? We know in the past when he kind of drops in and leaves. Are you expecting him to stay this time?
Well, I think it's really hard to predict what he's going to do. We've learned that. But, he will have just come out of his birthday celebration in D.C., where the UFC, fighting championship will have taken place. I was just over by the White House a couple of hours ago. All eyes are focused on this huge stadium that's built, the Claw, on the lawn of the White House that he's compared to the Eiffel Tower. So there, who knows what kind of a mood he will be in when he gets to France the next day. So I think it's, it depends on so many different things. But the reality is that Macron has his well-laid agenda. There is the geopolitical backdrop. There are the economic challenges to face. And Macron's job is to really manage and balance this so it's a successful G7 at the end of the day.
What is the relationship like between Macron and Trump? We know Trump sort of, one day will endorse a leader, the next day turn around and pull that endorsement. What's this relationship like in the past with Macron?
So it's evolved, but I do think that he has, it helps to have a decent relationship with your counterpart. And again, there's been a huge amount of effort invested in this G7, and the outcome being one that is well received by President Trump. All of the things that Trump wanted on his agenda are now being addressed, whereas they hadn't been as of the past couple of months. And there are a couple of good issues that have carried from one G7 to the next that the president really deeply cares about.
Okay, so what did Trump want on the agenda that perhaps the other leaders were not as interested in seeing?
So I mean, it depends on how President Trump approaches the issue of the European, in particular, support for the opening of the Strait of Hormuz, whether he gets there and wants to berate the Europeans. But where I see a lot of room for working together, very much in the area of supply chain security, economic security, particularly critical mineral supply chains, extraction, processing, manufacturing. The whole supply chain needs to have collaboration with allies and partners. And so that is something high on Trump's list. It's high on all industrial economies lists. And so that is a robust area for agreement.
Heidi, what do you think will be addressed in regards to China?
So, I mean, China had this call, and I think it was an offering of an olive branch by President Macron to actually engage on his number one issue for this G7, which is addressing global imbalances, meaning Chinese overcapacity and bringing other parts of that conversation to the table, whether it's excess consumption in the U.S. and then underinvestment and lack of competitiveness in Europe. And the thing is, I don't think that I don't think we're going to have an agreement out of that. So you have in the run up to a big additional summit coming within the European Union on how they're going to tackle China's overcapacity and protect their industries. I think this is sort of a last gap before we might see an escalation and a trade war.
And then the CEO of OpenAI, Sam Altman, also expected to attend. What do you expect as part of that conversation?
So France obviously sees itself as an AI hub in Europe, and so I'm not surprised that the prominence of AI on the summit agenda also creates more opportunities for cooperation. particularly with Anthropic's the mythos and the ability to share the autonomous cybersecurity and software engineering capability. So it's not just Sam Altman. You have Demis Hassabis and you have Dario Amodei coming from Anthropic. And so I do think, I don't know what is going to be their agenda, but I think coming to some kind of a joint understanding of where the future of AI is going to bring the G7 economies is clearly front and center now.
All right, Heidi, I've got to leave it there, but appreciate your time. Heidi Kribo-Redeker, Senior Fellow, Council on Foreign Relations. Up next, Adobe shares did trade lower after RBC cut its price target after their latest earnings report, and the CFO announced he's leaving. More in a moment. Shares of Adobe have been trending down after RBC cut its price target on the software company after its latest earnings report, and then a surprise exit by the CFO. We got more from Matthew Swanson, analyst, RBC Capital Markets.
Going back 3 years now since we kind of started the Gen AI conversation, it seems like they're fighting a battle on a lot of different fronts. And obviously, historically, one of the great things about Adobe has been kind of that lack of pure play competition. Right. It's been much more so about how fast is the TAM growing than is what is their market share within creative. And so I think what we're really waiting for as investors is to see something that shows there's a net benefit to this current digital transformation. Clearly, some things are working well, some things maybe aren't. And until that total ARR line increases, I think that's really where investors are kind of going to get hung up on this stock.
All right, let's talk about what's working for them.
Yeah, for sure. I think if you really talked to Adobe 3 years ago and then talked to them today, looking purely just on a timeline and a roadmap of how they wanted to go about this Gen AI technology kind of revolution, I think they'd be pretty pleased with the way that they've executed against that roadmap in terms of getting generative video out, generative 3D, generative images. The integrations we've now seen between the Experience Cloud and the Creative Cloud, I think makes a lot of sense. Those two used to really be run as separate businesses. And I think they've now kind of put together in the enterprise a really intriguing value proposition of how Gen AI becomes what it ultimately needs to for all these companies, ROI, right? And really showing how creating these extra images can run value all the way to that endpoint in marketing, getting to the Experience Cloud, which really justifies the expense of the entire ecosystem. I think the area where we're probably seeing a little bit more challenge is in their strategy around the consumer side and in really being able to prove out that the consumer space with all these new entrants between point solutions, platforms, and then some of these larger walled garden creative tools isn't going to end up, getting much more bifurcated.
And are they heading in the right direction for that, do you feel, or do they? What changes do you think would you like to see with that?
Yeah, I think on the enterprise side, I continue to feel really bullish, especially on the Experience Cloud, which used to kind of be the secondary platform relative to creative. That creates a lot of differentiation for the company. And again, taking a very ROI focus for the enterprise, I think that's where you really see generative kind of wallet share shift, right? Is being able to actually prove out not just what can we do, right? We can make a lot more advertisements, more marketing material, more images, but why should we do it? And I think the why we should do it is really explained by those tools in the Experience Cloud. Now, on the consumer side, I think one of the challenges is we know for sure that there are more people creating images than ever before. There's more people utilizing creative tools than ever before. I think one thing we're still trying to figure out as a market is what maybe the difference is between mind share and where all the users are and what ends up being the wallet share, meaning which of these users are really going to be willing to pay for products long term. And I think that's where Adobe is sitting right now in terms of pushing through this freemium transition, which obviously had the impact on ARR last night in terms of their guidance.
All right, and let's talk about the CEO left and the chief financial officer. Well, actually, he's now left as well, didn't he? Sorry, he's leaving on Monday. What kind of an impact is that having, that transition and that change?
Yeah, maybe we'll start with the more recent one, just because that was the surprise last night, was Dan Durn leaving as CFO. So, I mean, it was announced right at the same time that he was heading to Marvell Technologies. Obviously, in terms of his 30-year career in finance, Adobe's kind of been the outlier, actually, in terms of a software company. He spent much more time within the semiconductor space. The nice thing with having a company the size of Adobe is they do have CFO of the experience business, Steve Day, who's going to be taking over as interim CFO. You also have a CFO of the creative business, Karen Burgess. And so they have a lot more processes in place in terms of how things kind of rolled up in terms of running those subsegments, running the guide business. But it obviously is a challenge for a company trying to find foundation, trying to find its footing, as you mentioned, also going through a CEO transition to now have the top two executives, be exiting at the same time. We could see maybe this complicates the CEO transition a little bit more. We would expect the CEO to transition first before we would see anything happen from a CFO standpoint. And it does still feel like the most logical CEO candidates are internal.
Okay, and I mean, and I imagine people start to question, is that them abandoning ship?
Yeah, I mean, and it's obviously a fair question. Anytime you see two of the top executives at a company that's had struggles from a stock performance standpoint, I think if you look at each of these in isolation, I think that Shantanu's exit was, pretty orderly in terms of the amount of communication that he had with the board, the timeline that he had from his announcement to kind of the period of leaving, and then also the fact that he's going to stay on with Adobe as the board chair. I think obviously the CFO side, the timing is unfortunate that it happened during this window of the CEO search, but it seems like an opportunity that one obviously came up with a time frame around it, and then also something that fit Dan's, historical preferences, I guess, in terms of when you see what his jobs have previously been in.
Matthew Swanson, analyst, RBC Capital Markets. Up next, why investors are losing confidence in Indonesia. Back in a moment. Indonesia was once seen as a darling of investors, but fears of corruption and policy missteps in markets and government are raising concern about the country's economic future. Bloomberg takes a closer look in the weekly doc.
Fried food. What's not to love? It's delicious, but also generally bad for you. And curiously, the same could be said of some stocks in Indonesia. In fact, they're often called
deep fried stocks. While they may look tasty on the outside, inside, they're really not that healthy.
Unhealthy stocks are just one of the reasons investors have become wary of Indonesia's stock market, which until recently was the biggest in Southeast Asia. And concerns are growing over the country's potential for growth more broadly.
Just 3 to 4 years ago, it was an investor's darling. There was so much buzz.
It's one of the fastest growing economies in the world.
At $1.5 trillion, Indonesia's GDP is more than Singapore's and Thailand's combined.
Within Southeast Asia itself, Indonesia is the largest economy.
Indonesia wants to be on the world stage. It wants to grow faster, and it has all the ingredients for it.
But fear of corruption and policy missteps, both in markets and government, is putting this path at risk.
Moody's warns Indonesia's tighter export controls may spook investors.
The Indonesia market here down about 19% in the past year.
Indonesia's currency, the rupiah, has fallen to all-time lows against the US dollar in 2026, and analysts doubt it will rebound anytime soon.
is actually one of the worst performers against the dollar in Asia. And that sends an incredibly strong signal to investors that things aren't fantastic.
This could have a ripple effect across one of the fastest growing regions in the world.
Indonesian assets are often seen as a barometer for risk appetite in Asia.
So can Indonesia regain investor confidence, or does this mean a stomachache for all of Southeast Asia?
Indonesia is the world's fourth most populous country, more than 280 million people. That's spread across an archipelago. If you strung it out from across the Atlantic Ocean, it would stretch from New York to London.
There's also a higher group of younger people living in Indonesia, which makes it an attractive consumer market.
Fashion brands from Uniqlo to Zara all have operations here. It is the world's biggest producer of Barbie dolls, one of the biggest producers of Hot Wheel cars.
Start your engines.
It's the world's largest palm oil exporter, nickel producer, and the world's largest exporter of thermal coal.
Such vast natural resources have meant Indonesia always had a lot going for it.
Indonesia's economy really took off in the 1970s and 80s when the country was a net oil exporter. It was a member of OPEC. And during those years, it was growing at 6%, 7%, 8% sometimes.
Much of this growth was overseen by President Suharto. Although his authoritarian regime raised living standards and expanded the economy, it was also marked by widespread corruption and serious human rights abuses. Tensions came to a head in the late 90s when the Asian financial crisis triggered a collapse in regional currencies and plunged Indonesia into economic and political turmoil.
In Indonesia, the rupiah was particularly hard hit, and eventually it led to the near collapse of the banking system.
Suharto was forced to resign in 1998.
And it really ushered in a new age of democracy and financial controls in Indonesia. A lot of them are still in place today, including one of the biggest ones that international investors watch, which is the 3% cap on budget deficit spending.
Limits on deficit spending presented Indonesia as a responsible nation. Foreign investments coming into the country soared in the 2010s, surpassing Vietnam, Malaysia, and Thailand. This helped fuel the nation's GDP. With the exception of the Asian financial crisis and COVID, Indonesia has had steady growth of around 5% a year for the past 2 decades. By 2014, when Joko Widodo assumed the presidency, Indonesia was viewed as the rising star in the region.
Joko Widodo started to implement much more market-friendly policies, allowing foreign investors to come in through areas such as infrastructure, trying to get companies to invest in the country's commodity market. And that actually generated a lot of excitement among not just domestic businesses or foreign companies, but also to the larger international market.
But prosperity on paper has concealed the nation's pervasive wealth disparities, which led to violent protests in 2025.
Public outrage over inequality and rising living costs.
The country's middle class, shown here in red, has shrunk since 2018, with the number of vulnerable and poor rising. Indonesia's current president has approached these problems from a new angle.
President Prabowo Subianto has deep beliefs in state-led capitalism.
One strategy has been to launch a sovereign wealth fund like those in Singapore or the Middle East. It's named Danantara.
The idea is to actually manage hundreds of the country's state-owned enterprises, which the president has deemed as, being inefficient. It's supposed to also get foreign investments.
One of the major concerns with Danantara is simply governance.
It's seen as some sort of a piggy bank to fund some of the president's social policies, and that is creating some confusion among foreign investors.
Prabowo has also announced plans to tighten control over some of the country's biggest commodities, calling for a new state-appointed company to manage exports of palm oil, coal, and some nickel products.
The intention of this policy is to crack down on something called under-invoicing, which basically allows you to shift some of those profits offshore and avoid taxation in Indonesia.
Because it's under Danantara, it will be market-friendly, it will be for-profit.
It would also boost state revenue needed to fund Prabowo's costly flagship plans, including his multi-billion-dollar free meals program for school children and pregnant women.
Our free meals strengthens our economy.
The program is popular among some voters, but so far positive effects across the economy have yet to materialize. It's also created strain on the country's budget.
Because of this expensive social welfare programs, the country is actually close to breaching its 3% legal limit.
Not including the pandemic years, Indonesia's budget deficit in 2025 hit its highest level in the past 2 decades.
International investors are worried that the fiscal state isn't quite what it used to be.
This leads us back to those deep-fried stocks.
It's how people in Indonesia call stocks that are heavily manipulated.
Large amounts of stocks in Indonesia are owned by the nation's wealthiest tycoons. And because of this concentration, the amount of shares available for public trade, called free float, is actually quite small in some stocks. And ownership isn't always transparent.
Most countries set a minimum free float requirement to make sure markets stay liquid. But in Indonesia, that requirement is much lower than in many other markets.
You can see that here. Until recently, Indonesia had the lowest free float requirement in the region. A low free float means it only takes a relatively small amount of trading volume to move the price significantly.
And because of this, prices can rise very quickly, but crash very fast.
Such market irregularities prompted MSCI, a global stock market index provider, to warn that it may reduce Indonesia's weight in its emerging markets index.
The most shocking element was the prospect of potentially downgrading Indonesia's stock market to frontier market status.
In the stock market, you saw a sell-off that you hadn't seen since the 1998 financial crisis. And months later, the market is still one of the worst performing in the world.
It impacts where they are in the pecking order of a particular investment universe.
Another clear indicator of stress are the high yields Indonesia is paying on its bonds.
The higher the bond yield, the more a certain government needs to pay for those who invest in the nation's bonds. In Indonesia's case, it's one of the highest in Asia.
Prabowo's government is trying to limit the damage and has vowed to address some of these structural issues. In March, financial regulators approved a measure to double the country's minimum free float requirement.
Now, the devil's in the details. How long will it take them to really increase transparency about who owns what stocks? And will they go after some of the big market players that might be guilty of market manipulations?
All of this is happening against the upheaval of tariffs and war.
Fuel prices in Indonesia are some of the cheapest in the region. If the president really wants to keep fuel prices low, he's going to have to pay for it if oil prices keep rising.
A lot of emerging market currencies have come under pressure. So if we see continued selling of the rupiah, of its bonds, of its stocks, it shows that investor interest in some of the real growth stories in Asia that's waning.
If there's a global loss of trust in Indonesia, Indonesia becomes more insular. I don't think anyone in Indonesian government, Indonesian business wants to see a more insular country.
All right, let's take a final look at where we ended the day and also ended the week. The TSX up today 266 points, 0.8%. The S&P up 0.5%. And the NASDAQ up 0.3% or 79 points on the day. All right, that does it for us on The Close. Thanks very much for joining us. We'll see you back here on Monday.